Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Have you ever found yourself wondering what's truly powering the rapid changes in global finance? Or maybe how the very idea of money is being reshaped for our digital world? Beyond the headlines and, let's face it, the speculative hype. Today we're taking a deep dive into stablecoins. Our mission, pretty simple, really. We want to cut through the noise and deliver you the most important insights. We've got a stack of incredible sources, mainly a big global survey. Over 1,000 financial professionals weighed in. And we're going to show you how these digital assets are not just, surviving, but actually thriving, moving from a niche curiosity to something essential. Think of this as your shortcut to being genuinely well-informed on one of the most dynamic shifts happening in finance right now. We've got fascinating data directly from decision makers, folks across North America, Asia, Europe, Latin America, the Middle East, and Africa. They talked about their strategies, timelines, the challenges they see, and trust me, some of these findings, they're really going to make you think about where finance is actually headed.
Okay, let's unpack this then.
When we hear crypto, I think a lot of us immediately think of price swings, right? Volatility.
Right, that's the common perception.
But stablecoins are designed to be fundamentally different, built for stability. So when we talk about a stablecoin, what exactly are we talking about here?
Essentially, you're looking at a type of digital asset that's engineered, really, to maintain a stable price.
Okay, how? How do they do that?
Well, the key is how they're backed. Usually it's one-to-one by a reserve asset. So think of it like a digital dollar. For each digital coin you hold, there's typically a real dollar, or maybe cash equivalents like short-term government debt held safely in, say, a bank account or trust. Some can even be backed by commodities, like gold, although fiat backing is much more common right now.
Got it.
And what's truly fascinating, and what the survey data really emphasizes, is they're becoming a core building block for what we call tokenization strategies.
Tokenization.
Right.
taking real things and making them digital tokens.
Exactly. Taking real-world assets or rights and turning them into digital tokens on a blockchain. And this is becoming super relevant in payments, treasury management, and settlement.
Okay, so if they're designed for stability, what stops them from not being stable? I mean, we've seen some projects stumble, haven't we? Is that something people are still worried about?
That's a really critical question. And it speaks to, I think, the growing maturity of this whole space. The industry has learned some hard lessons, definitely. Now, the focus is heavily on transparent, regularly audited reserves, clear backing.
Makes sense.
And what our sources reveal, quite clearly, is a major shift. We're moving past the speculative hype towards, utility-driven adoption, real use cases. Stablecoins aren't just an on-ramp into the broader crypto world anymore. They're solving tangible, real-world business problems.
Like what specifically?
Well, think about taking a sledgehammer to the inefficiencies in cross-border payments. Those can be slow and expensive. Or simplifying the complexities of treasury management for big corporations. Managing cash across different countries, different currencies, it's complex. And overcoming the limitations of traditional settlement. Banks close, wires take time, stablecoins potentially offer 204/7 settlement. This is all part of a bigger vision, what some are calling the Internet of Value.
Internet of Value, I like that.
Yeah, imagine a global, programmable financial system, multi-asset, designed for seamless, pretty much instant value transfer. That's the goal.
That sounds, well, almost utopian, doesn't it? But what I find really interesting here and what our sources really hammer home is that this isn't just theory anymore. We're seeing major established players making concrete moves.
Yeah.
That really validates the model, I think.
Absolutely.
Like, take Visa. They've significantly expanded their stablecoin settlement, now allowing USDC payouts, that's a major stablecoin, to huge merchant acquirers like WorldPay and Nuvei. That's not just a small tech test. It basically says stablecoins are a viable, efficient rail for everyday commerce.
It's mainstreaming, yeah.
And then there's PayPal. They offered, a 3.7% yield on their PYUSD stablecoin balances?
Yeah.
That's not just a little bonus. It feels like a clear strategic play to get people using stablecoins directly, maybe instead of just holding cash. It signals a future where this digital currency competes directly.
Driving adoption, definitely.
And we're also seeing companies like Ripple launching institutional-grade stablecoins, RLUSD, purpose-built for enterprise payments, settlement, backed one-to-one by USD deposits, cash equivalents.
Right, focusing on that compliant enterprise need.
Exactly. And even central banks, regulators, they're actively putting stablecoin use cases into policy discussions. That tells you they see long-term relevance here.
For sure. These aren't just fringe experiments anymore. These are significant moves by industry giants. It signals a fundamental shift is underway.
Okay, so to really get a handle on this, the survey we analyzed reached, as I mentioned, over 1,000 professionals, financial institutions, enterprises across the globe, North America, Asia, Europe, LATAM, Middle East, Africa. And these weren't just any employees. We're talking decision makers, people in payments, treasury, cash management, digital asset trading.
So the insights are coming right from the people actually making the call.
Exactly. So what did they say?
Well, when these leaders were asked about the impact they expect from stablecoins on business, finance, society just 3 years out, the optimism was widespread. But the regional differences, really interesting.
Oh, how so?
Leaders in the Middle East and Africa, MEA, showed the highest confidence. A staggering 98% see a massive or significant impact coming.
Wow, 98%.
Yeah. Latin America, or LATAM, right behind it, 96%. Then you have North America at 87%, Asia Pacific, APAC, 86%, and Europe, 85%. Still high, but a noticeable gap.
That is a noticeable difference. What do you think drives that higher optimism in MEA and LATAM compared to, say, North America or Europe?
It seems to often come down to, immediate market pressures, the problem stablecoins can solve right now. For MEA, you have pervasive issues like high inflation in some areas, currency devaluations, maybe limited access to foreign exchange. Stablecoins become a very practical, immediate alternative, preserving value, facilitating trade.
A real need.
Absolutely. Plus, places like the UAE and Bahrain have been proactive with regulatory frameworks, which builds confidence.
Okay. And LATAM?
In LATAM, a lot of the enthusiasm stems from those acute cross-border payment inefficiencies we talked about. MasterCard, for instance, notes the average cost of sending money home remittances is still around 6.3%. The UN target is 3%.
Big difference.
Huge. Stablecoins can potentially slash those fees, sometimes down to fractions of a cent, like 0.01% or 0.02%. And we see it playing out. Brazil's largest private bank, Itaú Unibanco, launched a bank-backed tokenization platform to its, 60 million users. They're directly using this tech to solve real economic pain points for their customers.
Okay, so businesses are optimistic, especially in certain regions, but are they acting on it? Are they actually using
The
stablecoins?
survey data gives a pretty clear yes on that. Overall, something like 86% of all participants showed an openness to using stablecoins. Less than 10% said they have no plans to use them at all.
That's pretty overwhelming openness.
It is. And more concretely, a third of businesses surveyed are currently using stablecoins in their operations right now.
A third already.
Yep. And over half plan to adopt them within the next 3 years. So the momentum is clearly there. We also saw, maybe unsurprisingly, higher current adoption among B2B fintechs. They're at 40% globally. And companies with existing digital asset experience, they're at 43%.
Makes sense, the early movers.
Right, but it's not just them. Even more traditional financial institutions are expressing significant interest in laying groundwork.
And when they do use them or plan to, what's the main driver? What's the purpose?
Well, when asked about why they'd use stablecoins, nearly every segment, regardless of region or industry, highlighted the same top 3 use cases.
Okay, what are they?
Number 1, cross-border payments. Faster, cheaper alternative to traditional banking. That came up again and again.
No surprise there.
Second, kind of related, is using them as an alternative to traditional banking or financial systems altogether. Improving financial access, enabling transactions maybe without needing a bank account in the traditional sense, and cutting transaction costs, sometimes to near zero.
Interesting. Financial inclusion aspect.
Exactly. And third, trading and trade settlement. The appeal here is the 24/7 accessibility, potentially better liquidity, and reducing counterparty risk because settlement can be faster.
Okay, payments seem like a huge piece of this.
Definitely. And that leads to the next question. Where do these leaders think stablecoins will have the biggest impact, specifically within payments? The survey points strongly to cross-border, as we said, but also consumer-to-business payments and vendor-supplier payments.
How does that break down regionally?
Well, interestingly, LATAM leaders expect a really significant transformation in vendor-supplier payments. 56% see a big impact there, and consumer-to-business payments, 55%. Those numbers were higher than their global peers.
So focusing on those business and consumer transaction flows.
Right. North American leaders, though, they expect a greater impact on treasury management. About 30% more emphasis there than in other regions.
Treasury management, why the difference?
It's likely linked to that surge we're seeing in tokenized U.S. treasuries. These tokenized T-bills provide stablecoin issuers with low-risk, transparent ways to generate yield on their reserves. So it fundamentally changes how large institutions might think about managing their cash and short-term investments. It makes treasury operations potentially more efficient, more dynamic.
Got it. So for the businesses already using stablecoins, what makes them so valuable day to day? What are the benefits they're actually realizing?
Our sources say it really boils down to 3 main things: speed, market expansion, and security. Also, hedging against inflation came up strongly.
Okay, speed first. That seems obvious but powerful.
Hugely powerful. Instant or near real-time payment settlement was highlighted by 70% of LATAM leaders and global money transmitters.
70%.
Yeah. For anyone who's ever waited days for a bank transfer to clear. Oh, you can see the appeal, right? It's a massive value proposition compared to traditional rails. Pure magic, as you said earlier, almost.
Okay, speed is huge. What about market expansion?
This ties into that financial inclusion point, providing access for underbanked or unbanked communities. Think about Ripple's RLUSD, again, potentially facilitating near-instant payments in regions where getting traditional banking services can be difficult or expensive. Opens up new customer bases, new supplier relationships.
Right, and the inflation hedge. That's intriguing.
Yeah, over half of the enterprise finance leaders specifically highlighted stablecoins as a hedge against inflation. That was well above the global average for all respondents.
Where is that most relevant?
You really see this playing out in places like Argentina and Venezuela, sadly, where local currencies have faced rapid erosion. Businesses and even individuals are actively using USD-backed stablecoins just to preserve the value of their working capital or savings. Venezuela, in fact, is one of the top crypto adopters in its region, partly for this reason.
Wow. A very practical, almost essential use case in some economies.
Absolutely. And finally, security. Both the more bullish firms and the more conservative financial institutions consistently flagged more secure transactions as a key benefit, likely tied to the transparency and immutability features of blockchain.
Okay, so stablecoins solve some key problems. How do they stack up against other options like central bank digital currencies, CBDCs, or even traditional crypto like Bitcoin? Did this survey touch on that?
It did. The data suggests that for specific business pain points, stablecoins consistently came out on top as the preferred solution right now.
Really? Where do they shine?
Well, for accelerating the speed of cross-border payment settlement, 39% chose stablecoins as the #1 solution over others. They also led in offering simplified currency exchange. 38% picked them first there. And for reducing the cost of cross-border payments, 34% saw stablecoins as the best answer.
So, speed, simplicity, cost for those core international payment issues, they seem uniquely suited at the moment.
Exactly. It highlights how they're positioned to tackle those specific financial friction points. Faster settlement, always-on availability, potentially much lower fees than traditional methods.
Interesting.
But it's not just about payments. Stablecoins are also acting as a key enabler for broader innovation, particularly in real-world asset RWA tokenization.
Right. You mentioned tokenization earlier. How does that connect?
Well, RWA tokenization is becoming a massive area of interest, especially for treasury and liquidity management. Imagine taking something like a U.S. Treasury bond or shares in a money market fund and representing ownership as a digital token on a blockchain.
Okay.
Stablecoins are often crucial plumbing for this. They're used for minting these tokens, for redeeming them, sometimes for custody, and critically, for enabling 257 trading and settlement of these tokenized traditional assets. Think about tokenized money market funds. They often use stablecoins for the on-ramp and off-ramp.
Can you give an example?
Sure. Ondo Finance, for example, deployed a tokenized U.S. Treasuries Fund, OUSG, on the XRP ledger. It's backed by a BlackRock Institutional Money Market Fund, BUIDL. And the key part, it offers 247 minting and redemption using a stablecoin like RLUSD.
Ah, I see. So you can buy or sell your stake in that treasury fund anytime, using stablecoins, not just during bank hours.
Precisely. It's a perfect illustration of how tokenized assets and public blockchains powered by stablecoins are starting to reshape modern treasury management. It brings traditional assets into this new, always-on digital infrastructure.
Okay, so we have clear use cases, major players involved, innovation like RWA tokenization. With all these benefits, what's the big remaining hurdle? What's the one thing that, if solved, really unlocks the full potential?
Regulation. It came through loud and clear, the survey results.
It's regulation in general, or specific types.
The overwhelming sense was the need for clarity and consistency, predictable rules of the road. If financial institutions and enterprises feel confident they can meet necessary regulatory requirements, operate within clear guidelines, then, as one respondent put it, it's game time.
Game time. I like that.
Yeah. This desire for regulatory clarity was the top factor cited when respondents imagined a future where all digital currencies, CBDCs, stablecoins, etc., were readily available. What would drive their choice? Compliance and security, tied together, came first.
Security being tied to good regulation, presumably.
Exactly. After compliance and security, about 28% of participants then pointed to the inherent benefits: payment speed, settlement time, and the stability or longevity of the stablecoin itself as key drivers.
And the market is already huge, right?
Oh, absolutely. Yeah. The leading USD-backed stablecoins like Tether's USDT and Circle's USDC handle enormous volumes. USDC recently passed, I think, $18 trillion in all-time transaction volume. Yeah, and it's accessible to potentially 500 million end-user wallets. Ripple's RLUSD also saw significant growth, surpassing $3 trillion in total trading value earlier in 2025. The scale is already massive, even before full regulatory clarity in all jurisdictions.
Right. So wrapping this up, what does this all mean for you, the listener, who's trying to stay ahead on the cutting edge of finance?
Well, our deep dive clearly shows that financial institutions, enterprises, they're way past just being curious about stablecoins. They're building concrete strategies.
Real plans.
There's undeniable momentum here. Stablecoins are emerging as a very practical path towards a faster, cheaper, more transparent financial infrastructure. And as we've seen, adoption isn't uniform. It varies by region, by sector. Leaders in the Middle East, Africa, Latin America are really leveraging them for those critical cross-border payments, hedging against volatility.
While others might be more focused initially on streamlining treasury or speeding up trade settlement, different needs, same underlying tech.
So what's the big picture takeaway? I think if you connect all these dots, it's pretty clear. As regulatory clarity continues to improve, and it is, albeit slowly in some places, and as the underlying blockchain infrastructure matures, well, the institutions that are embracing stablecoins today, experimenting, building capabilities, they're going to be the ones best positioned to lead. in tomorrow's digital financial system. The future of finance looks increasingly stable, yes, but also programmable and truly always on.
Okay, so here's something for you to mull over as we finish. A final thought. If stablecoins really are making finance always on, if they're driving costs down towards zero, making global value transfer seamless, what other parts of our daily economic lives could be fundamentally reshaped? Things we haven't even fully imagined yet. Think beyond just payments, how we save, how we get paid, how businesses manage entire supply chains. What new possibilities is a truly global, programmable, always-on financial system unlock? That's something to really chew on.